Good morning, everybody. We'll be starting in just a second. Okay, here we go. All right. All right. We got that. We got that here. Got that here. Actually, we got that here. There. Here. And there we go. All right. Let me just turn on my screen and we'll get going. Good morning, everybody. Good morning. Hope everybody's doing well. Happy hump day, everybody. Happy hump day. Let's say hello to everybody. Well, let's make sure everybody got our note. Got it here, we got it there, and we got it here. All right. All right. Good morning, everybody. I'm a little bit early today. I'm trying to get on a little bit earlier so that I can actually get to work on time. Hey, Vano, Robert, Frex, Mike, Deanna, Richard, Arnulfo. We got Kevin. Good morning, Kevin. We got Dave, Stan, Yuri. We got Lloyd. We got Jill. We got Mark. We got Ray. We got Mark, Braz, Minnesota, Matt, Jody, Wade, Dave, Javad, Devin, Penny. Good morning, Penny. Good morning, Burning the Bear. Illinois Grain Farmers joining us. Harry. Good morning, Sandra. Gregory, Jesse, Harold, Hefe. Good morning, Hefe. Richie, good morning, Richie. We got Terrence, we got Warren, we got Hopium Addict, we got Dr. Luke here, we got Brian. Let's see. Let's see. We got Stefan, we got Steve, Richard, Delbert, Bull Rider, Tom, Eduardo, Russ. Russ. Good morning, Russ. We got Dave, Ira. How do you find pre-market show live a few minutes before? Um, Ira, if you subscribe to our channel, our YouTube channel, it'll pop up right on your computer. It'll notify you right on your computer, or you could just look at the Telegram channel. Stacy, Gregory, Doug. We got Ray, we got Sergey, we got Dragon Dawn, we got David, Roddy. Good morning, Roddy. Kurt, Karen the Shark is here. The Sassy Trainer. Good, good. I like Tanya here. Douglas. We got Moondog. Moondog. We got Greg, Walter. We got Sam, Big Mo. Hey, Big Mo. Hariam, Anu Kumar. Good morning, Anu Kumar. We got Scott. Uh, to the Lord. Yes, Scotty, good morning. Rick, good morning. Rihanna, good morning. SJL, good morning. Jason, Afadies, Henry, Nestor, Seth, Rachel, Michael, George, Charlie, Randy, Jason, Cifazio, Rick, good morning, Rick. Good morning. Good morning. Good to see you here. Shamens, Kai, we got Ivan, we got James, we got Bill, we got Paul Palmer. Sean, we got Frank, we got SJL, Rock, Cheese Great Traders here. We got Adam, Mr. Eagle Beagles here. Diamond Jen, Ralph. Good morning, everybody. Good morning. Good morning. And remember, if for some reason you're not getting notified on YouTube, here, let me go here real quick. Here's the best solution I can give you. If you go right here and subscribe to my Telegram channel, it'll notify you I won't notify you, but Clyde will notify you. See this guy? He notifies you every time we have a session. See right here. It's in the Telegram channel in all three of my channels. By the way, folks, I've been getting a lot of emails. I should address this. I've been getting a lot of emails. Well, when I say a lot of emails, 3 emails, that's a lot of emails for me, telling me that that I have other Telegram channels. I don't. Those are pirated Telegram channels from thieves who want to trick you into trading Bitcoin. I don't trade Bitcoin. I'm not a Bitcoin expert. I've never claimed to be a Bitcoin expert. I don't really trade Bitcoin except for the futures and day trading, the stuff we do here. But those are not my channels. My channels are the main channel, just the Roger Scott channel, the Pit channel, and Trading Zone Live channel. Okay. I only have 3 channels, and soon we'll have the day trading channel for small caps, but that's it. So if you have other channels that are mine, or if somebody like me reaches out and says, I want to trade your money, it's not me. Okay. I just want to make sure you guys are aware of that. Okay. And the link I just gave you is the link to the regular Telegram channel. Please use that. And if somebody reaches out to you asking you for money under my name or under Clyde's name, I'm trying to be funny here. Please don't. It's not real. Okay, it's a scam. It's just a scam. And I'll notify everybody via email as well. But I did get a couple of emails, so those scammers must be getting pretty desperate. All right, let's begin. First things first. First things first. VIP room today at noon. Here is the link for that as we are getting started. Kane will join us today, and today we're going to analyze tech stocks ahead of Nvidia, and we're gonna let you guys tell us what your favorite stock is, and Kane and I will both analyze the stock, and we'll give you the best option play for that stock, whether it's an income trade, a calendar trade, a debit spread, or a regular trade. So today you guys are going to have a chance to speak up and ask us about your favorite stocks. We usually have a really good session. Raleigh will keep the score, and he'll write down all the stocks that you guys pick, and we'll have a great time. And if you guys have questions, here's a link to Customer Service Live, the Cam and Gustavo show. Please join us. They're always here. They're always trying to help. They're extremely helpful. Good morning, Pia DeBrock. Good morning. Please join them from 10 to 1 p.m. every single day. They are doing God's work. And lastly, before we begin, it's a good time to begin. This is why I've been coming here early. Please. Hey, Linda, good morning to you. Jimmy, good morning. Kirk, good morning. Good morning, everybody. Laguna, good morning. Good morning, Don, Paul, Lawrence, Marty. Good morning, everybody. Please make sure you're watching at 1080p. Don't settle for auto. It'll download you. It does it to me all the time. Make sure you're at 1080p right here, okay? If you're at 1080p, and then if you don't mind, give us one thumbs up. It helps Google rank us higher, to let Google know that we're serious about business, that we're not some scammers, things like that. Okay. And obviously we are not, far from it. All right. So we have FOMC today at 2 p.m. Real important. We've got FOMC today. We got housing starts. That's not going to be delayed, and that's going to be a pretty important number. Okay. We also have Fed speakers. We have a 20-year bond auction, and we have FOMC minutes. So we do have Fed data. We also have petroleum reports. When I ask you guys for catalysts, just say Fed. Okay. You don't have to itemize it. You could say Fed and crude oil. It's more than enough, okay? More than enough. You don't have to get into all the details. But I do want you to make a little note for yourself that at 1 o'clock, we're going to have a 20-year bond auction. Anything over 5-year can gain some volatility. And right now, with all the unknowns from the Fed, it might or might not have that volatility. So make a little note for yourself. Please make a little note for yourself. You know what? I don't trust you guys. I'm going to post it in Telegram channel. Note for yourself, 20-year bond auction at 1 p.m. and FOMC minutes at 2 p.m. Eastern today. Could be market moving, Clyde says. Okay. All right. I'm posting notes for you in Telegram channel, okay, in case you guys don't remember. I'm trying to do anything possible to help you guys here, okay? Earnings. Well, we've got a lot of retail earnings that came out, including Lowe's this morning, Target this morning, TJ Maxx came out. This is retail, 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 retail. You could see right here. Lowe's is already out. Target is already out. TJ Maxx is already out. And then we've got a couple of stocks that came out last night. But anyhow, we do have some of these stocks reporting. Okay, we do have some of these stocks reporting today. So, and remember, this is the implied volatility that's priced in. Okay, that's the implied volatility that's priced in. I tried doing time spreads yesterday, but I didn't see anything giving us a good edge. I'll check again tonight to see if anything gives us a good edge on time spreads. But I didn't see anything too sexy yesterday. And there's obviously less earnings coming around. Tonight, we're going to have NVIDIA. That's going to be the big report. It's coming out after the market closes. I would assume that institutions, folks, please listen to me. And I'll give you a link for this in case you don't have it yet. I'm going to make an assumption that institutions are going to be a little bit on the sideline today because they don't want to make big bets heading into NVIDIA earnings. It would be really, really foolish of them to make big bets going into NVIDIA earnings, okay? So we're going to be really, really cautious on that. NVIDIA, the big NVIDIA is coming out. That's really market moving, okay? That is really, really market moving. All right, the bond market. The bond market is behaving itself, at least for now. When I say behaving itself, I'm saying it kind of loosely, but we have not lost this trend right here. Folks, if this breaks, and I'm going to say this again, I've been talking this up a lot, but this is a classic head and shoulders pattern right here. Okay. If we break this level, this is the neckline. If we break this level right here, this 200, that means anybody who bought bond, if we break this level right here, which happens to be right next to the 200-day and the 100-day moving average, this level right here is very, very critical here. Let me post this for you here. This level right here, shoulder, shoulder, head. If this breaks, you've got nothing below this area right here. Okay? So look, if interest rates sentiment, if interest rate dropping sentiment, here, if interest rates start rising, we break the neckline on this head and shoulders pattern. If rates go down, we go back up and will negate this pattern. I'm putting that for you on Telegram channel so you guys see it, okay? All right. Michael, can you stick to what we're doing? We're not talking about DLO. If you do that again, I'm going to eliminate you from the session. I want folks to focus on what I am talking about. All right, Michael Anthony from Van Halen. Thank you, sir. All right. So I'm not really focused on the gaps. I'm focused on the bigger picture here. That's a head and shoulders pattern, and that's a neckline. And if we break down, that's bad. And if rates go up, we go up here. Okay? So rates going up, rates going down. All right? I'm just trying to get you guys to see it right here. Head, shoulders, neckline. We break down. Head, shoulders. I'm trying to be as Stalker. Hey Cam, good morning. Good morning. All right, let's continue talking about what we're talking about here, okay? All right, so we got to be really cautious because there's three crazy. Let me explain to you the situation here. These are three really strong support levels. If bonds break this level right here, that means anybody who bought bonds between January 1st and now, the long bond is going to be losing money if we trade below this level. It will also mean we will be breaking the neckline. This is a very, very, very significant level for the bond market. where I drew this red line, when you see all this area right here, it's extremely important for the bond market. We are going to be in deep doo-doo. This could be okay. Let me explain to you the relevancy here. Okay. All right. I'm booting you, Michael Anthony. You're out of here. All right. There's no more Michael Anthony. Okay. Michael's gone. Bye bye, Michael. Um, I have no tolerance for bullshit, folks. So I want you guys to understand the relevancy of this. Okay. Economy gets gets better. Economy gets drastically worse. Economy gets drastically better. Economy gets drastically worse. I'm not kidding about that. I'm not kidding because this has been building for several months now. Okay. So better economy, worse economy. You do not want to see bonds trade below this level. And also the odds, if we do trade below this level, the odds of interest rates going lower is going to diminish to about 15 to 20%. Now, we're not there yet. We're not there yet. We're not there yet. But I'm explaining to you, we don't want to get here. We don't want to break this head and shoulder pattern. There's too much stuff writing on here. And I know I'm sounding really dramatic, but I'm serious. This is dramatic. This could be the difference between us being in a really crappy economy and an okay economy. Okay. So we don't want bonds, the long bond trading here. We want it to trade here, 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 anywhere except below this line. Okay. And again, folks, this is really important. This is really, is it a daily? That's a good question, Dr. Luke. This is a daily chart. Everything we're talking about is on daily. This is daily. This is daily. And if you look at weekly, by the way, I haven't looked at it weekly. Yeah, I wouldn't, it doesn't make much daily, 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 daily here. Daily, just daily, right here, this neckline right here. This is a classic head and shoulders. And if we break, and again, we don't just break a pattern, we're breaking three key levels. That's a year-to-date VWAP right there. So if you break that level, that means everybody who bought in 2020, 2025 is going to be on the downside in the bond market. The odds of Fed lowering rates is going to go drastically down. Here's what I'm trying to say. I think we would only come down here if we were in a really, really bad position. Okay. That's what I'm trying to tell you. Okay. And I'm not trying to scare you. I'm not trying to scare you. I'm not trying to scare you. I'm not trying to do anything like that. What I'm trying to explain to you is the reality of life, that you do not want bonds to trade here. Remember, we were at 97% of Fed lowering rates in December here. Right now, we're at 50%. When we go here, we're in no percent. All right, gold. Gold seems to be consolidating, seems to be following the lead of the US dollar, which is hurry up and wait. The fact that commodities is not doing anything is not that great right now, but the fact that we're holding on to this trend line. See this blue line right here? This is the quarter to date VWAP level, and we're holding that level really well, and we're holding the 50-day moving average. I personally believe if the stock market's going to be bent out of shape for a little longer, I think investors are going to start putting their money back into gold market. I think one of the reasons gold is not rising at this point is because China's doing really, really poorly, and they haven't been buying gold. China's been stocking gold like there's no tomorrow. With that said, I'm going to raise this line a little higher right here. And here's what I'm going to do. I'm just cheating a little bit. I'm raising this because we have this level here now, but I haven't changed the green line. So I'm just raising the shaded area. Pretty much anything in this shaded area, and I'll go ahead and continue it this way. Anything beyond the shaded area is just randomness. Okay. There's below that level. There's no anchored VWAP. That's the year to date. Look. This is year to date. This is year to date VWAP right here. This VWAP is from January 1st right here. I'm sure you believe me. I don't have to go all the way back, but if you want to, I'll prove it to you. Look. Here. See that? See January? See where it starts? So if this tracks the volume, and buying of volume and price. So if we start trading below this level, that means anybody who bought bonds, the long TLT, not bonds, TLT, bonds, long bond, below this year will be at a loss. You understand? Aside from breaking the neckline, aside from breaking the head and shoulders pattern, and aside from breaking the 200-day moving average. So, I mean, everything I'm saying is pointing to the same thing. Three major things happen if we break this level. We break a head and shoulders pattern, we break the year-to-date VWAP, and we break this mustard ugly colored line, which moves with the 200-day, which is the 200-day moving average. None of those things are good. And every one of those three things is very material. Okay? So I'm just letting you know, and it would not be good for the market. Maybe you should, when you look at bonds over the last 20 years, you should, when you look at bonds, uh, no. I don't like to use weekly. No. This is good enough. This is fine. I'm just looking at this level, and trust me, I've been doing this for a long time. I don't look at weekly. I don't look at monthly. I look at daily, and this is a major level right here. This area is right here is very important. Okay, gold. We're not doing anything on gold. We need to break above 4,002. I can't even believe I'm saying that. I remember gold at $280 an ounce when I started trading. Actually, no, when I got my first job as a commodity broker, $280 an ounce. That was a long time ago. It was almost, wow, it was a long time ago, almost 30 years ago. Okay, so we got to break this level. Otherwise, we just consolidate. Okay. All right, let's continue. US dollar. I probably should have started with US dollar and then gone into gold, but what I did was, you see this is the 200-day moving average right here, and we're below the 200-day. This is par right here. This is par right there. This is the year, we're below the year to date price right here on the dollar for obvious reasons. But you could see right here we're coming back up. That's the 200-day moving average. I drew this line. See this line? I put it right on top because we have a descending triangle. But even if I take it out, you could see we're coming up to the 200 and bouncing. We still have this descending triangle that I built. I just wanted to move this for a second so you could see there's two things there. There's my line and there's the 200-day moving average. And they're completely aligned. In theory, if this holds true, we should continue for the foreseeable future just staying within this area right here. Staying within this area right here, pinched between the 200 and this line right here. If we start breaking higher, that's positive, okay? So I'd like to see the US dollar start breaking higher. But based on the technicals, I think we're going to stay in this range right here. Richie, hey, with the conditions of the economy, inflation, and higher rates of credit card debt, people will really suffer paying even higher credit card interest if TLT reaches. Absolutely. Absolutely. 100%, Richie. 100%. That's a critical level for the bonds. Let me put it to you like this. That's a fundamental level for the bond market. Fundamental value. That's a fundamental level. That's not just like a technical price level. There's meaning behind that level. Because if that level is broken, that means anybody who bought bonds this entire year is at a loss. And it's a 200-day moving average, which is a significant technical level. 200 is like investment level, investment grade. Like, when we're trading, we're looking at the 15-day, we're looking at the 8-day, and then you get into real levels like the 50-day, the 100-day. Those are not trading levels. Those are fundamental levels. They're technical, but they're based on real fundamental data. Okay? So what Richie's saying is absolutely 100% correct. I mean, right now, I'm betting you right now, people are having a really hard time uh, with gifts for the holidays. We're going to have a lot of problems with retail, I believe, this year. Hey, Texas Kirk. Hey, Captain Beef. Good morning, Tim. Good morning. $35 an ounce. Wouldn't you wish you can go back in time for a few days? Hey, Carla. Good to see you. Good to see everybody. Good morning. By the way, for all of you who are just joining us right now, we're having a great session, actually. Please make sure you are watching us in 1080p, switch to 1080p, and make sure you put the thumbs up button. Stacy says, will it being head and shoulder pattern, what's the likelihood of TLT going? It's 50-50. It's 50-50. Well, actually, Stacy, it's literally 50-50 right now, based on implied volatility and what we're seeing. It's literally 50-50. It was 3%. Okay, so here, let me show you, Stacy. Right here, It was 3% that we were going to break this. 3%. And I was saying, no, 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 no. There. So here's what happened, folks. This is important. I don't want to spend too much time on this, but this is really important. When the Fed lowered rates in October, for November, every people just assumed it was a done deal for December. And I was saying, no, 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 no. And the bond market kept going up, up, up. And when we were here, we had a 97% chance of it going higher because they were going to lower it with a 97% chance. Right here, we're about 50%. So we went from 3% that we were going to break this level to 50%. There's a 50% chance right now, as priced into the bond market and based on this, that we're going to break that level. It's a 50% chance. And that's not just me, that's actually the implied value of the bond market. So I'm saying it, and the bond market is saying it. Two things are saying it from an independent analysis. 50%. I'm sorry, but that's what the number is. All right, so US dollar, as I said, we're just consolidating here. And if we keep consolidating, you're not going to get a lot of movement from the gold market, and you're not going to get a lot of movement from the crude oil market. And as you can see here, crude oil is doing nothing. Just when we thought we were going to break this level, I'm going to cheat again and just put that right there because we've already violated that level, but still haven't broken. This is very similar. Remember what I just did with the US dollar? Excuse me, with the gold. I raised the shadow, but I didn't change the green. Notice I did exactly the same thing with crude oil to the downside. They're really trading inverse of each other right now, gold and crude oil. So my support level didn't break, but my trading range did. So if we break this level, 58, we're going to go lower. And on gold, if we break above 43, 42, 42.50, say, we're going to go higher. No, it's not good. It's not good. We do need usury law. I couldn't agree with you more, Leslie. Couldn't agree with you more. I do too. I agree with Adam. Look what Eagle Beagle Adam just wrote. I agree with him too. China is at the 50-day moving average already. This is not good for the U.S. either. This is not good because remember, we have a lot of ADRs, stocks that are Chinese stocks that trade here in the U.S. like Baba, Baidu, so forth and so forth. This is not good. This puts pressure on those stocks, and we are now at the 100-day. If we break the 100-day, there's nothing here till the 200, except for this area right here. So China is not helping us at all. And folks, I'm not trying to be like negative or I'm not. I'm literally looking at the charts. I'm not trying to give you one thing about me. I do not have any agenda. I'm very flexible. If I can be convinced that the market's going to go up, I'm going to go long. I'm very flexible. I'm not getting stuck on any one. I'm being really nimble right now. I'm trading both sides of the market. We took a short on AMD. So I have no agenda. And by the way, however it resolves will not make any difference to my trading. Okay? However it resolves. So I have no bone in this. I'm literally interpreting the charts for you. A lot of these guys, they have an agenda. They're either very political or I have zero. I go with the wind. Okay? You can change my mind in 2 minutes if you make sense. Okay? Okay. So let's talk a little bit about the stock market, the actual stock market. Do you guys want to write down catalysts for me as I'm doing this? And I've actually been coming a few minutes earlier so I could spend a little more time with you. Heck, I even moved my office closer so I don't have to drive 15 minutes to work every day. All right. I do. I don't BS. Clyde deserves extra treats for helping us every day. You're right, Alan. He does. He doesn't need extra treats. He does. Okay. Do you guys want to post the catalysts? And I think I gave you a lot of them already. Consumer Protection Bureau disbanded. Oh, yeah. Don't get me started, Jen. Also, while we're waiting for catalysts, let me give you, we're doing good on time today. VIP room today. Trader Kane will be there, and we will, did I miss Bitcoin? I might have missed Bitcoin. Let me get into Bitcoin 1 second. I did. Here is VIP room. Here is Customer Service Live, Cam and Gustavo show from 10 to 1 every day. Cam, Gustavo, please tell us what you guys are going to be covering today. And let me do Bitcoin. I thought I did. Oh, here it is. I have Bitcoin. I just didn't put it in the right order. Sorry, that's on me. Okay, it looks like it wants to bottom out here, or at least like it looks like it wants to pause and come back to the 8-day EMA. I would be holding off right here. I don't think we're going to go down anymore. I think we're going to either stay here and build a base, or we're going to go up into this area right here and touch the 8 or the 15-day for the foreseeable future, meaning the next 24, 48 hours. So I am bearish on Bitcoin, but I wouldn't be selling it here. I would be waiting for a pullback to the upside or a consolidation area here because that's quite a down. That's quite a down move. So I would expect after a move like this, a little consol. See how here we go down, we bounce, we consolidate. Here we go down, we bounce, we go up, and then we go. Same thing. I'm expecting us to consolidate here, come up a little bit, at least to the 8-day before coming back down again or reversing. And the fact that we're below the 200-day moving average and the year-to-date VWAP is telling us, see head, shoulders. See, look, let me show you guys. I know I'm taking a little extra time, but trust me, it's worth it. Okay, look. Head, shoulder, neckline right here, and here's your breakdown, right? And here's the 200-day moving average, and here's your neckline, and look what we broke, right? Here, hold on one second. Bitcoin did what we do not want to see in bonds above. Okay? See what I just posted for you guys? See what I just posted for you? Bitcoin did what we do not want to see in bonds above. See how it broke the neckline and see how the bond market this is I'm just looking see how the bond market's not hasn't broken this line yet? This is the bond market, okay? This is Bitcoin. Head, shoulders, we already broke. Okay? It's tonight, Brian. Tonight. Tonight after the close. So it means it's not a catalyst for today. So you see how Bitcoin already did what we don't want to see. It's already below anybody who bought Bitcoin over the last year is down right now. Here's the VWAP and here's the 200-day. We don't want to see what happened to Bitcoin happen to the bond market, okay? We don't want to see that. It's the best example I can give you. Sorry, I wrote it out. We don't want, it's like a negative, what we do not want to see in the bonds, but I think you guys understand what I'm saying. Okay. Catalyst. Let's see what you guys are posting. We got Fed, crude oil, chip stocks. Let's see. Do I have chips? Yeah, chip stocks are on my list. Consumer discretionary, definitely. Yeah, little consumer staples, utilities. SMH is chips. Chips. You've already mentioned that, Steve. Steve Fredrickson. You did a good job. Let's see. Ed G, I like Clyde being the next. I'm going to dress him like Jerome Powell. We'll see how he looks in a suit. Okay. Are you nervous for the reaction? I'll talk about Nvidia tonight and tomorrow. We're not there yet. Let's see. So yeah, we got okay. Wesley says Fed data, consumer discretionary, infotech. What you got infotech for, Leslie? I don't have infotech. Am I missing something? Hold on. Sometimes I miss stuff. Hold on. Sometimes I miss stuff. I do. I do miss stuff sometimes. I got the chips. I got consumer discretionary with TJ Maxx, Lowe's. We got that. We got utilities right here. You got consumer discretionary right here. Pan W doesn't come out till tonight, I don't believe. I don't have a I don't have Infotech. Cool cam, Pro Trader dashboard. I'm not nervous about the reaction. No, Pan W doesn't. I don't think Pan W comes out till tonight. Hold on, let me check. If it does, then you're right, and I'm wrong, and I don't mind being wrong. No. After market closes, Wesley. After market closes, not today. Remember, folks, if it's after the market closes, it's not a catalyst for today because how can it trade? How can it be a catalyst for today's session when the news doesn't come out till after the close? This will be a catalyst, Leslie, for tomorrow. So please don't forget to say PanW tomorrow and Nvidia tomorrow because they're reporting after the market closes. Okay. Yes. Sometimes even I'm correct sometimes. So I have retail dash consumer discretionary, Fed data, consumer staples in there too a little bit, crude oil, chips, and utilities. That's what I've got. Okay, let's continue. Now that it's very important for me that we're all on the same page. Whether you agree with me or not, that's okay, but I want to make sure we're on the same page. All right, doing good on time. Investors are looking ahead at earnings report for Nvidia. I will have a much better idea of how Nvidia is going to report. But truthfully, I don't know, Brian, and nobody does. Nobody does, and I'll tell you why. Let's say their earnings are better than expected, but Wall Street doesn't like it. They're going to go down. Let's say that their earnings are better than expected, but they're not as good as Wall Street likes. They're going to go down. Let's say their earnings are better than expected, and the stock goes up, and the earnings conference doesn't go like investors like. The stock will go down. Let's say the stock isn't. Let's say the stock goes down because they don't outperform earnings, but their frisky CEO says something amazing, like Elon Musk always does during earnings. Remember, we're going to build a little car. What car? What? And earnings went. So earnings are a complete unforeseeability because you need to be right on the actual number and you have to be right on the reaction. So I don't try to guess earnings. What I try to do is use time spreads when they're on our side. I don't know how implied volatility will be on Nvidia and how often it underperforms earnings, and I won't know that till tonight. So if you see a time spread on Nvidia, it means it's matching our turns. But I don't know, and nobody else does. And if anybody tells you they do, they are just lying to you. They're just straight up lying to you. Okay. And the last thing I want to do is bullshit you guys. You guys get lied to so much in this industry that the last thing I want to do is lie to you. Okay. All right. Home Depot slid 6%, top percentage loser. Dow, world's largest home improvement retailer, weaker than expected earnings. Marvell fell. Micron fell. I still like Micron, by the way. I still like Micron. Amazon fell 4%. Amazon falling is very, very bad for the economy because we all know Amazon economy. Hello, hello. MDT climbed over 4%. That was very, very nice. Very, very nice. Factory orders rose. Okay. ADP data says that we only shed 2,500 jobs, which is not a lot. So again, there's a lot of, when I say it's 50-50, and keep in mind, going back to the bond market, remember, we haven't had a month of Fed data, over a month of Fed data. So it really is a big question mark for everybody. And if anybody starts telling you they know, they don't know because we haven't had the Fed data. Okay. Barkin said on Tuesday, offered an upbeat look on inflation while indicating labor market may be softer than the data. See, available data suggests. We don't have the data. Still, he did not indicate whether he will back another rate cut. I think, okay, here's my personal opinion, and I think everybody's entitled to our personal opinion. I don't think it would be prudent for them to take any action till they have the data. And I don't know if they will have all the data before their next announcement. They should, because it doesn't happen till December 10th. But I think right now, everybody, including myself and everybody, is just talking out of their ass because we don't have a lot of data. And it happens to be that this data is extremely important because this is the data they need to decide up or down. So again, just telling you my 5 cents, okay? Take it for what it's worth. Here you go. 53% chance. This is as priced into the bond market. This is implied. This is like implied volatility. This is what investors believe right now. Investors believe 53% chance bond market going back up, bonds going back up, and 47% believe it's going to come down. Okay? So, or remember, it could just go nowhere for a while. But you got to understand, we're at a very crucial level on the bond market. This is the big daddy right here. This is the big daddy right here. Okay. Investors are awaiting earnings on Nvidia. Absolutely nobody knows what they're going to do. But at least I could tell you I will tell you today when I get into the office how often Nvidia outperforms and how often they underperform. Okay. I have you guys covered. We got a lot of retail to digest today. A lot of retail, a lot. Target, Lowe's, TJ Maxx, a lot of retail. Okay. We have FOMC minutes coming out today. That'll be very important. They're going to be talking about last month, second year. I think they're all going to be really mixed. We have a divided Fed, something we. Hey, let me ask you guys a question. Do you guys remember the last time we had a divided Fed? Because I don't remember the last time we had a divided Fed. Penny says, do you think the missing data will come out randomly as it's developed, or will they wait on each set of data until the? I think it's going to become randomly. I think it's going to randomly keep coming out. That's my opinion. Okay, so we also have a Fed that's in disagreement right now. So you have Fed is not agreeing, and you have missing data. That the responsible thing to do would be to wait. Again, in my opinion. Okay. August trade balance, it will be released in a few hours. This is more of a US dollar report than economy than a stock market report, but it's something we need to pay attention to. We got crude oil today. This will be really important. They're looking at a negative 1.9 million barrels compared to 6 million barrels. So they're looking at a little reduction. Europe is flat. And remember what I wrote to you this morning. A lot of times ahead of a huge earnings report, the market will go limb. Okay. A long time ago, right, Wesley? A long time ago. I don't remember, so it must have been a long time ago. And yes, Penny, you can call. Well, it'll be random, but they'll announce ahead of time. Okay. Random, but they announce ahead of time that it's coming. In other words, they'll say, we're going to release it tomorrow at 11 o'clock. But it's a random time that they're releasing it. But they will let us know that they're releasing it ahead of time. But yeah, it'll still cause volatility, Penny, regardless of whether I'm right or you're, regardless of the semantics, it's going to cause a lot of volatility because we are at a very interesting point right now. Okay, Europe is flat. That should give us a good indication of what we can expect in the U.S. This is randomness right here. This is at least for the first half of the day. We're not seeing a lot of movement. Okay, consumer staples, energy stocks advanced. Tech stocks fell amid investor caution ahead of Nvidia. That's not here nor there. China closed slightly higher. Not a lot of movement in Europe and Asia. Not a lot of movement. Snapping a 3-day losing streak. Japan closed lower today, but not crazy lower. Okay, marking a fourth straight session of losers. Tech stocks are down, mirroring drop in the U.S. They're just following U.S. right now. Okay, we've already talked about all the earnings coming out today. So let's talk about, wait and see mode, Diamond Gen. Wait and see mode, which is why I've been trading so much less in the swing trading programs because we have a great amount of unforeseeability right now. That's why Matt's been buying options not 3 4 weeks out, but 6 to 8 weeks because we have a lot of unforeseeability. We need to get past this. You see, it's not a bearish time, and you see, because this is putting us at 50%, it's causing a great amount of unforeseeability. If this was 70% up, 30%, it would be better. But 50-50 in this neckline, this is not good. This is not, I know I keep coming back to this, but okay, put the call ratio. So I warned you yesterday that put buyers are getting a little bit ahead of themselves. Okay. The put buyers were getting a little bit ahead of themselves. And what did the market do intraday yesterday? It reversed. And what is the market doing now? It's a hair higher. This is representing this. And don't say I didn't warn you because I did. Here, let me post this for you. I did actually. I posted this for you yesterday. I didn't just talk about it. I posted this for you yesterday. But let me post it again to calm people down a little bit. Where's my? Okay, here we go. All right. All right. Okay, here we go. Coming down a little bit. Here. Much better today than yesterday. So yesterday, put buyers were getting a little too frisky. They were getting a little too aggressive coming into yesterday. Today we're not. We're at a mixed balance. So now we have put buyers are not as aggressive as they were, and now we have money coming back into calls. Okay, we have some money coming back into calls. Volatility today is not. Yesterday we tried to go up and break this 25 level. We can't do it. That's a strong resistance. I drew this for you yesterday. We couldn't break this level. I think we're going to be coming down today and ping ponging. I doubt we're going to break this level because Nvidia has earnings after the close, but I think we're going to stay in this area today and maybe see a little bit of a downtick, especially if the market stays stable, relatively stable. There's a good chance we'll open a little higher and just drift all day. Okay. Again, I don't see a lot of institutional money coming in. 1993. Thank you, Susan. I appreciate that. I did not know, but like I said, it's been a while. That's a year before I started trading, Susan. That's 33 years, 32 and a half years ago. Yeah, that's why I don't remember it before I started trading. I started trading in 94. So slightly higher, put the call ratios looking a little bit better, a little bit better, a little bit better. Volatility stopped going up. It's now a little bit better, a little bit better, a little bit better. Okay. What about momentum? Momentum is still shit. But again, remember what I said. We're not on the 20th floor. The elevator is not getting stuck at the 20th floor. We're already quite down there. Okay. We have some stability. We have 52% of stocks trading above. If this goes below 50, we're in deep doo-doo. The Russell is right now literally at 50%. Do you see why I say we're at a very interesting point right now? We're at a very interesting point right now. And the bond market is what's driving all of this right here. Okay. So Russell 2000 small caps don't have 50%. Russell 3000, that's the one and the two together, 49%. We are literally at a precipitous of a bear market, folks. I'm not kidding. So don't think the market's going to crash or anything like that. We're almost there. We're almost there. Look at the number of stocks, 34%, 51%. Momentum is not great. You only have 40% of stocks in the Dow trading above the 200-day, and 60% of the Dow stocks are trading below the 50 days. So you don't really have you don't really have a lot of strength coming into the market. Um, momentum. Let's see. What kind of stocks are leading right now? Look where all the speculative stocks are, except for communication services. Bitcoin, consumer discretionary, home builder, interest rates, semiconductor, technology, Russell 2000, interest rates, QQQ. No momentum. Now, remember yesterday I warned you that we have too many stocks making 90-day lows. I warned you about this. I said we're at 465. Okay. Well, coming into today, we're already at 326. So the momentum is getting better. That's the downside. To the upside, we have no momentum. Okay. What about stocks making 90-day high and lows? We have 225 stocks making 90-day lows. Yesterday, we had 385. So we're definitely starting to bounce a little bit up from the craziness, okay? We're starting to bounce from the craziness. With that said, let me show you. Let's go to I'm gonna use real-time TC 2000 right now. Bear with me 1 second. Okay. All right. So it's easier for me because this is real time. So remember I told you when we go up here and touch this area and we're overextended. Okay. See, it stays another day here and then it starts coming down. We're overextended and we're near the 100-day moving average. We're overextended. This is today. This is today. I think today we're going to be inside yesterday's range. I do not want to break this low. 656. Okay. Preferably, I'd love to take out the high and start coming back towards the 50-day moving average, preferably. Okay. But we're pinched between the 100 and the 50 right now. You could see it right here. Saving grace, look what happened when this penetrated. We went back up. What happened when this penetrated? What happened when it penetrates? It starts moving higher. It penetrates, it starts moving higher. So we penetrated yesterday. So I'm looking for a little bit more of a bounce here, hopefully a good bounce. I don't want to see us breaking lower than this. Yesterday's low was 655.86. I don't want to see us going down here. Okay. As long as we close above this area and don't break this, I'm okay today. So today, choppiness, what I'd like to see is break above here, 665.42. QQQ, same thing. See how we touch this area, we bouncing off. Let's see if we can bounce off higher today. But again, we don't want to break the low. We want to break the high to the upside. SMH, same thing. See how we're near the lows? We want to get back above this level. MAGs, same thing. They're all in the same position. Here's what the market really looks like right now. This is what the market really looks like. See, remember, choppy, and we're now below that choppiness. So what I'm hoping for is that we're going to get back on this side of 186.24 on the RSP. And if I'm going too fast, folks, you can pause this, you can rewind this, you can here it is. It's all here for you guys. FOMC minutes at 2 p.m. Okay, so we need to get back here. QQQE. Yeah, we need to get back here. We're at a crest of that tidal wave right now. We need to get back up here. Today, the next few days is going to be very important for the market because we need to see how aggressively it wants to get back above the 50-day moving average, especially after breaking overextended levels to the downside. Okay? So we went from being overextended to the upside to being overextended to the downside. See, right here. So the question is, are we going to bounce back quickly or are we going to bounce a little bit and then come back down? And the answer to that, my friends, is the bond market, which I drew for you this line a long time ago. And we're still in it. Okay? Intraday levels. Let's do intraday levels. I got a nice email yesterday, folks telling me it's helpful. I'll start with the bond market since we're already there. Okay. Folks, do you get this analysis anywhere else? I'm just curious. Do you get this level of analysis anywhere else? Okay. Okay. Let me know. I'm curious. That's nice. Okay. No, no, no. Not even close. Okay. All right. Well, thank you guys. I appreciate it. Thank you. It means a lot to me. Okay, let's put this for you guys on Telegram. Let's get you the bond market. Obviously goes without saying, we don't want to break this low today. 88, 80. We see bonds have been going up all morning since 6 in the morning. That's good. We don't want to come back down. Okay. Thanks, Dante. Thanks, Mary. Good, 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 good. Lloyd, I explained the impact of bond levels for about 10 minutes earlier today, and I posted it in the Telegram channel. I spend a lot of time talking about bonds, and there's a great significance on the bond levels. Lloyd, I highly recommend you rewatch the beginning of the video. I'm assuming you mean the daily levels, the ones I drew here. These are just intraday levels for day traders. SPY. Oh, look at this is from yesterday. Look at that. It's pretty good, actually. Yeah, not bad, not bad. Okay, not bad. There we go. Okay, that'll do it. All right. See, and not one word of politics today. All right. Spy levels. All right. Thanks, Tony. I appreciate it. Thank you, guys. I appreciate it. Very kind of you. Thanks. Thanks, Don. Thank you, everybody. I do appreciate it. Oh, I can create polls. You're right. You know what? You're right. I can't. You're right. Enlighten. You're right. I can't create polls. We should create a poll. We should create a poll. That's. I'll have to learn how to do it. Maybe Matt can show me how to do it. QQQ here. QQQ levels. That's from yesterday. Yeah, held this pretty damn well, actually. Okay. Right. That's nice. That's nice. That's nice. Okay. It's about as good as it's going to get. And folks, again, based on the overnight markets, it could be that we just wait till because we have a lot of news coming out the next 24 hours. Could be that we just drift. It's hard, it's really hard right now because we have a very important we're at a turning point and we don't have any data. So it makes it really hard for traders to trade without having this Fed data. It's hard for everybody. And also the Fed, I would imagine. I mean, they'd love to have this data. Okay, there we go. Yeah, right there. And right here. There we go. That should do it. Keep an eye on SMH today, especially towards the end of the day for obvious reasons, NVIDIA earnings. And as soon as I get to the office, maybe a little later today, I'll look what the odds are of NVIDIA. I think NVIDIA outperforms estimates 8 out of 10 times. So I don't think it'll be a good time spread, but I'll check. I'll check. But based on my memory, I don't remember doing time spreads on NVIDIA. All right. All right. I think it's a very healthy correction. I think we do need this correction. All right. I'm not seeing any crash or anything like that, folks, at all. I'm not seeing anything resembling a crash. We're not in a credit crunch. We don't have a credit crunch. Credit crunches causes crashes. Think about the last four crashes we've had. Credit crunch. That's from yesterday. Look at that. Damn, pretty good. This is for day traders, and I'll get into my top stocks and the small caps in just a minute. You could see what happened after Europe opened yesterday, right here. Asia and Europe opened. We were going higher, which is good. Excellent. Okay. My main concern is the bond market right now. The bond market. If that bond market drops below the 200-day moving average, we are in a shitstorm. My opinion, of course. And IWM levels. Look how well my levels held yesterday. That's pretty damn good. I should use them more often. You could see right here what happened. As soon as Asia opened, the market went up. Okay. All right. That should do it. That's IWM levels. All right. That should do it. What are your thoughts on the repo market low liquidity? I think it's okay right now. I think it'll be the low liquidity. I think it's we are not in a credit crunch right now. The thing that causes markets to drop big is credit crunches, and we don't have a credit crunch right now. Okay, let me give you your small caps, potential small caps for today. And those have been working out real good. Okay, let's see what we got. Oh, mess myself up. Okay, here we go. Sometimes there's a lot, sometimes there's hardly any. Okay. KZIA. Remember, only during the day session, not pre-market, and only above the levels I give you or above the pre-market high. 1025. 1025. Oh, that's nice. That's definitely in play right now. So you see how this is breaking out right now as we speak? You're going to have to mark the high, the pre-market high. I don't know what the pre-market high is because it's still making a high. So I'll put it here. BACC. And I'm just going to put the pre-market high at 1045, okay? 1045 with a question mark. I'll put a little question mark by it because we don't know what the high is going to be. It's still moving higher, okay? So again, just put a question mark there. That's a beauty right there. That is a beautiful, 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 beautiful stock. Actually, let me tell a friend of mine about it. I got another friend who's a guru, and we exchanged these stocks. Check out uh, BACC. Yeah. Okay. Okay, let's continue. Oh, it's the same stock. It's just a different variation. It's the same as this. It's different variation of the stock. Okay, same shit. Okay, rhyme. No, 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 no. Oh yeah, definitely. Already been halted already. SEMR. Okay, it got halted at the day high, and I don't know where it's going to reopen, so I'm just going to put the day high here again, but you're going to have to use your brain and pre-market high, pre-market high. So I'll put 1205 here with a question mark, okay? Yeah, with a question mark because we don't know what the high will be. We don't know what the pre-market high will be for another half an hour. No. No. I'm very picky with these, by the way. Once we launch the alert service, obviously I'll be giving them to you as they come. But for now, no, that's it. Oops. Nope. Nope, that's it. So we got K here. Let me write this for you guys. We got KZIA 1025 above. We got BACC at 1045 with a question mark. I'm putting the question marks there. I'm not done yet. I'm still SMER with a 1205, and I'm going to put a question mark there, okay? Because I don't know. Let's see. Hold on. Okay, there's that. You want me to look at SGML? Okay, SGML. No, no, there's no volume on it. No. Okay, let me give you large caps. Okay, let's go back to stock to bar charts, and I'll give you large caps. And so far, we're looking just like Asia, slightly higher without much directional bias. So we could just have a wait and see day today. But let me give you my large caps. Okay, I'm going to start with the shorts, and then I'll go into longs. Okay, I'm going to be late for work again. Meta to the downside, Toast to the downside, Coin to the downside, MCHP to the downside. This is a little overextended, so you may want to just use this for day trading, okay? Boeing to the downside. There's my dogs going again. They were so quiet. Uh, wrong stock, wrong stock, wrong stock. Boeing, here's Boeing. That was the wrong stock. SGBX is not good. A plus great. I just looked at it. It's not ready. Boeing looks really good for a short. ZTS. There was no shortage of good shorts for today, just FYI. Look at that. Breaks down and curls again. That's a nice trade right there. Don't do anything here. We got to break this 200. We broke the 200. Now we got to break this. If we don't break this, it's not going to be good because this can hold. So wait till we break this. That's the year-to-date VWAP right there. And it usually mimics the 200-day moving average, which is a good thing. That's what you want. Oh God, they're going. I'm so glad you guys don't hear anything. The pool man is here. Blackstone, that's a big financial company right there. ABNB. Yeah, like 6 to 8 minutes away. The boys have done everything possible to get me even closer to the house now. So hats off to our guys who run the offices. Alaska Air, that's a nice short right there. That's a very nice short. Nice trend, nice stock. Very nice short right there. Let me make a little note out of that for myself. That's beautiful, by the way. That's an A plus trend right here. That is an A plus trend right here. To the downside, obviously. That if you want to see a perfect short, that's a perfect short right there. Kava actually looks pretty good for a short too. Really good short. And CSGP. Yeah, they're friends, but they still bark. And there's four of them, Dr. Luke. So they got the pack mentality going. So when the little ones start barking, the big ones start barking. This is very nice. So far, I've given you guys really nice shorts. And you want to find shorts that have been going down consistently for a while, not just ones that just started going down now. Those will stay down more consistently. All right, let's look at long stuff. CMI could be an A line if we trade right here. Barrick Gold, this gold stock looks really good. Maybe a little too ahead of itself. I would maybe wait till we get right here, but it looks good. WBD. But flow doesn't have far to go. That's what. How do you know that, Janger 56? How do you know that flow doesn't have a lot to go? Discovery, WBDA. How do you know that this stock? How do you know that this stock? Do you have a time machine? How do you know this stock is not going to continue going down to $3 or $2? I think somebody over here said it's not going to go much down much longer, and somebody here said it's not going to go down much longer, and somebody here said it's not going to go down much longer, and it's still going down. Don't do that. Don't do that. Don't pick tops and bottoms. Guild, don't pick tops and bottoms. That's the most dangerous thing you can do. These are all 3 to 4 weeks out. Guild Science, DHR. Well, I got to get out of here. DHR. I wouldn't day trade this stock. It's very choppy, but it's got good move to it. MNST, I've been liking this stock for quite some time now. Bonds are starting to come off, by the way. And stocks are starting to slide. Look at the SPY the last 20 minutes. And look at bonds. See? We're starting to come off again. MNST, EXAS. Sorry, I'm just kind of trying to analyze, and that's a nice looking stock. It's a nice looking stock. It's a very nice looking stock, actually. VLO. You're welcome, Piet de Brock. Sure. And it can be a $5 stock, Janger. It's a nice looking stock. Even though it's down today, it's only touching the 8-day EMA. Matt loves those type of stocks. I'm going to tell Matt about that one today. Actually, let me tell him right now. Out. 1 second. Just sending Matt a little note. I already talked about gold. I talked about gold. CTRE, another good one right here. It's a very nice looking stock. Fro, Frontline, nice looking stock. INDV. Carl, you may want to just rewind the video. I did. That's a very nice looking A line right there. INDV. And last but not least, ACA. Arcosa. Did I pick it right? Oh, no, wrong stock. HCA. I can't read my own writing. HCA. That's what I wanted to show you. Yeah. That's a nice looking stock. Okay, folks, today Kane and I will be talking about your favorite stock in the VIP room, profit targets, levels, why we like them, why we don't like them. The last time we had a session like this, people were saying thank you so much because I give you what I do is I say, okay, well, let's see what story this stock is telling us. And I go through the story, and people really learn how to read price action really well by doing that. That's what's going to be in the VIP room today. And I'll include options too. And customer service live, Cam and Gustavo show from 10 to 1. HCA, yes, HCA, George. Sorry about that. I apologize. Folks, be cautious. Be cautious. We could be just doing very, very little today. Europe and Asia didn't do anything. Volatility starting to come off a little bit. Put the call ratios back to stability. I think investors and traders are going to be really nervous about taking directional positions ahead of NVIDIA earnings. I beg you guys, lower your exposure. Don't gamble. Don't anticipate. Just follow the flow. And I will be updating you all day long. And if I'm not there, Clyde will be there. I will see you guys later. We may have just a very mellow day today, at least what I'm seeing based on the pre-opening. But we have retail earnings. Retail is the biggest economy in America, and retail can really move the markets. Let me see what Target's doing right now. Target is breaking down hard right now. Look at that. Let me see what Lowe's is doing right now. Going up. Okay. All right, folks. I will see you later. Have a fantastic day. I appreciate every one of you. And if you have a question, roger@rogerscott.com. It was fantastic spending an hour and 20 minutes with you, and I'll see you at noon. Bye, everybody. Have a great day. Bye. Don't go crazy, folks. Don't go crazy. Take it slow. This is not a time to get FOMO. This is the last time you want to get FOMO. You don't want to get FOMO right now.